Hello, and thank you for joining us for today's webinar. I am Michael Fralix. I am a CPA and Tax Manager with Bowers Company CPAs, and I specialize in the area of sales and use tax. Today, we're going to examine a recent Supreme Court ruling and its impact on sales and use tax compliance and how the Wayfair decision will affect your business. There are only 5 states that do not have a sales and use tax. Doing some quick math, that means that 45 states do have a sales and use tax. Within those 45 states, there are over 10,000 jurisdictions that each have their own rates and their own rules. As you can see, sales and use tax is already a complex system, and it's becoming even more complex due to the recent Supreme Court ruling. Before we move forward, I think it's important to look at how we got where we are today. So sales tax and use tax, they're the same but different. Sales tax is the tax imposed on the actual purchase price of the property or the service. So a sales tax is collected and remitted at the time of purchase. So if you're in your home state where you live and you go to a store and you buy something, the person at the register is going to charge you sales tax. They're going to collect it from you and they're going to remit it to the state. If you purchase something out of state, on the other hand, and you bring the product into your state, that purchase is subject to use tax. However, it is on the consumer to voluntarily remit the use tax to the state, which usually doesn't happen. In fact, I just wanted to mention this, New York State actually has a line item on the tax return for a individual to compute the amount of use tax that they are liable for and to remit it over to the state with their income tax return. So a key concept or term that I'm going to be using throughout this presentation is what is called Nexus. And what Nexus is, it means that you have some kind of connection or tie to the state that's taxing you. So in other words, there has to be nexus for a state to tax you, some kind of connection for them to tax you. And prior to the Wayfair decision, this standard was based on a physical presence. So if you were physically present in the state, meaning you had an office or a warehouse or you had employees providing services in that state, not just any kind of service, it usually had to be soliciting sales, usually like if it was just an office employee doing admin functions, usually that did not create nexus, or if you had inventory, that used to be the standard. Now, nexus determines if you can be taxed by the state or if you're required to register. So what's going on with this Supreme Court case? What this is really all about is the states are starting to challenge this physical presence standard. And why are they doing this? They're doing this because of the emerging e-commerce economy. With all these internet sales, they're losing a ton of revenues because people are buying things online and they're not paying sales tax on the purchase. In other words, the out-of-state vendor isn't collecting it because they're not required to. And they're bringing the product into their state, and they're not voluntarily remitting what's called use tax to the state. So states are sick of this, and they're challenging this physical presence standard because they want their money, and they don't want to rely on the consumer to hand it over. So what they're trying to do here is they're trying to shift the burden of who is liable for paying over the sales tax, and they want to shift the burden to the vendor and not the consumer. They want the vendor, the out-of-state vendor, to collect it and remit it to them. So in South Dakota versus Wayfair, South Dakota had a statute in place prior to the court ruling that pretty much said, we don't care if your company is physically present in our state or not. If they're selling goods into our state or performing services in our state, if as a result of those services or products, they have sales of more than $100,000 or more than 200 transactions, we want them to register for South Dakota sales tax, and we want them to collect and remit sales tax directly to us. Well, as you can imagine, South Dakota was taken to court, and it went all the way up to the Supreme Court. And a company named Wayfair, if you haven't heard of Wayfair, they are a huge company, a lot of internet sales. They're similar to Amazon. They took them to court and said, you can't do this. We do not have physical presence in your state. You cannot require us to register in your state. And the court disagreed with Wayfair, and they ruled in favor of South Dakota and said, yes, you can do that. So this decision pretty much overturned the physical presence standard that has existed for years. And it has changed the current landscape of sales and use tax compliance. Now, states are requiring you to register and possibly collect sales tax if you have what's called economic nexus in their state. As you can imagine, a lot of states are jumping on the bandwagon and they're adopting similar economic laws. Most of the time, the thresholds are different. They could be higher than the South Dakota statute, which was $200,000 a sale. Actually, $100,000 or 200 transactions. Sometimes the thresholds are lower. Sometimes you have to have both so many dollars in sales and so many transactions. Sometimes it's an or test. So many dollars in sales or so many transactions. So states are jumping on the bandwagon. Every state is looking at this and saying, gee, we can have more tax revenue, count us in, and they are enacting some kind of economic nexus laws. Okay, the Supreme Court ruling, it happened back in June of 2018. So a lot of states are requiring you to register for sales tax if you have economic nexus in their state. The effective dates are usually between October of 2018 to date. They want you to comply with this new ruling and register in their state if you're above a certain threshold in sales or transactions. So what are the implications of economic nexus? I mean, as you can imagine, you have a ton of companies out there. Let's take a manufacturing company, for instance. They could be producing products in one state, and they could be delivering them out of state using a common carrier. Let's say they're using mostly rail, or they're using the United States Postal Service, what have you. Prior to Wayfair, because they were using a common carrier and not their own trucks, they weren't physically present in any of these other states. Now, all of a sudden, due to economic nexus, they are, or they could be, based on these economic nexus thresholds, and they could be required to register and possibly withhold sales tax and remit it directly to the state. And that's what we're going to be talking about for the rest of the presentation is what you should do now. You should conduct a nexus study, definitely. You have to look at which states are going to require you to register. Then we're going to talk a little bit about collection of exemption certificates. And then there's always two sides of a sales transaction. There's the buyer and the seller. So we're going to talk about the impact on a company actually buying product. So nexus studies. As far as nexus studies go, we really recommend that you have someone come in and do a nexus study and analyze your sales data and determine, now this is based on gross sales, not taxable sales, determine what sales you have in all these various states. And if those sales or transactions are over a certain dollar amount or a certain amount of transactions, then you are required to register in those states. So again, going back to the manufacturing example, you might be delivering product in 40 different states, and doing a nexus study, you might determine that you have economic nexus in 30 out of those 40 states. So what do you do now? Well, now you're going to have to register in those states. Now remember, nexus only determines if a state can tax you, whether you have a connection. So whether It's the physical presence standard, or it's this new economic nexus standard. It determines if the state can tax you and if you're required to register. It does not determine if those sales or products are actually taxable. So going back to our manufacturing example, you're a manufacturer out of state, you determine that you have Nexus in 30 different states, you're required to register. Well, there are a lot of exemptions out there that may say that your product is not taxable. For instance, if you're a manufacturer and you're selling all to wholesalers, most of those sales are going to be exempt due to a resale exemption. But that does not get you out of registering. So you may have to register in 30 different states and file 0 sales tax returns showing no taxable sales. And you're not going to have to collect and remit sales tax, but you're still going to have to register. That is going to be a huge burden on out-of-state businesses that have no taxable sales in the state. Another thing I'd like to mention is a statute of limitations. A lot of states have endless statutes if you're not filing sales tax returns. So, for example, if you decide, hey, I have no taxable sales, they're going to be 0 returns anyway, I'm not going to file. The state can come after you 5-7 years down the road and say, we're going to audit you because the statute of limitations has expired. We can do it at any time. And if you had any taxable sales and you were wrong, now they can go back and they can assess you penalties and interest on all of the sales tax that you failed to remit. So if you ever find yourself in that situation, there are some programs that you can enter into, tax amnesty programs and voluntary disclosure agreements. And in a nutshell, what they are is it's an agreement with the state that you're going to voluntarily disclose the amount of sales tax that you owe. You're going to file all returns going forward. And the state agrees to not assess penalties and not to look back to any prior periods. So it is a pretty good deal for the taxpayer if they're accepted into one of these programs. So I mentioned that Nexus decides whether you have to register and file, but it doesn't decide if your product or service is taxable. So another thing that we recommend is that you get a product taxability study done. And a product taxability study will determine if you have any exemptions, if anything applies to your business. I mentioned the resale exemption. A lot of manufacturers qualify for that. There's also exemptions if you're selling to a government or state municipality or a nonprofit. And there's many other exemptions. I'm not going to go through all of them, but they're very state specific. Some states have them, some states don't. So that's another reason to get the product taxability study done. The problem with all these exemptions is they require exemption certificates. At least a lot of them do. Okay, so let's say, again, you're that manufacturer and you have Nexus in 30 states. You're doing everything for resale, so none of your sales are taxable, and you're going to have to file 0 sales tax returns. But in addition to that, if any of those vendors are required to give you an exemption certificate to exempt their sales, you're going to have to collect exemption certificates from all your out-of-state customers, or at least the ones that you're going to have to file for. So that's another burden that's going to be placed on your business. Another impact it's going to have impact on your purchases. So far we've really looked at your business, your customers and what you're going to have to do. But let's say your business is purchasing things out of state, which, most of the time they are. Now, the vendors are going to be required to withhold sales tax on those out-of-state sales. Okay, so you're going to actually have to pay sales tax, where before you didn't have to pay sales tax on any of these purchases. Now, before, as I stated, it was up to you to voluntarily pay in the use tax, but the vendor wasn't charging you. Now, a lot of companies were voluntarily doing that. Consumers usually don't. An individual consumer, it's very rare for them to do it. Businesses sometimes would do it. It was usually the result of an audit. If an auditor came in and said, hey, we noticed on these purchases you didn't remit use tax, we're going to ding you for this amount of money, and then they started filing use tax returns. A lot of companies were doing that, but now they're not going to have to voluntarily do it. It's going to be done by the vendor. They're going to collect the sales tax on your behalf, and they're going to remit it directly to the state. So from your vantage point, if you think that you're exempt or whatever you're purchasing is exempt from sales tax, now you're going to have to complete a sales tax exemption form and give it to all your out-of-state vendors in order for them not to be required to withhold and remit sales tax. So another burden on your business. So in summary, you really need to look at where your customers are located. You need to determine if you have economic nexus in all these states that you are doing business in. Once you determine if you have nexus in that state, you're going to have to register in multiple states. You're probably going to have to file some zero returns. Some returns, you may have taxable sales where you're going to have to collect sales tax and remit it. If you were accruing use tax prior to this, you don't want to do that anymore, or there's going to be double taxation because, like I said, now the vendors are going to collect it. And you may want to consider an internal sales tax audit. And what that entails is someone coming into your business and actually looking at your invoices and, doing a risk assessment and determine what you could be on the hook for. And then, get you compliant, get you start filing these sales tax return and collecting and remitting sales tax and possibly entering in one of these programs that I talked to, whether it be a tax amnesty program or a voluntary disclosure agreement. So that is it for today. Thank you for attending today's webinar. I hope I have given you a lot of insight into the current landscape of sales and use tax. I have been able to help many companies avoid the pitfalls created by the Wayfair decision, and I've helped many of them avoid additional tax and penalties by becoming compliant. I am available for any questions you may have, and I'm available if you need assistance in any way in becoming sales and use tax compliant. Thank you.